It's Matt Simpson here from Forex.com, and I'm going to be looking at the Bank of Japan meeting and how the Japanese yen reacted. So the central bank held rates unchanged at 0.75% as expected, but there was a hawkish surprise given that only 6 of the 9 members voted for the pause and 3 dissented by voting for a hike. They also upgraded core inflation expectations for 2027. Naturally, that has seen a bullish reaction from the Japanese yen. That means Aussie yen, dollar yen, etc. are all trading lower against the yen. Now, the bigger question here is, of course, is if we're just seeing a bit of a minor reaction against stronger trends, or is this a bigger reversal? Just looking at the dollar yen hourly chart, it shows us that it fell as much as 55 points immediately after the meeting. And I think that we would have seen a much bigger move if traders were betting on an imminent hike. The other thing I'd like to point out is we've seen it time and time again where the Bank of Japan have every so often surprised with a hawkish tilt at a meeting, give themselves plenty of wriggle room, and then found a reason to not go on with that. So I think there's a little bit of that going on here where, yes, it's a surprise to a degree, but it's not an imminent hike around the corner. That said, we do still have Europe and the US to react to this, so it could still leave some pips on the table for traders looking for an extension of these moves. But let's zoom out for the bigger picture, and this is the daily chart of the yen against FX majors. So yen against the Aussie, CAD, Swiss, Euro, etc. In every case, it's clearly within an established downtrend, but we do have a bullish reaction today in favour of the Japanese yen strength. So let's take a quick look at market positioning. So look at the Japanese yen futures chart. It's been moving lower steadily for the past year. That said, in recent weeks, it's been moving within a tight sideways range. The blue line represents asset managers' exposure, which flipped to net short back in middle March, so a month ago. And then large speculators, they're a lot more heavily net short, but neither of these parties are at a sentiment extreme. So they could be betting more, is what I'm saying. That said, if traders do begin to believe that, in fact, the Bank of Japan are on the brink of a hike, we do have a fair amount of shorts here would need to short cover, and that could send the Japanese yen higher and pairs such as the dollar yen, Aussie yen, etc. lower. So taking from that angle, we could expect a bit of a follow through in later sessions because we didn't really expect the hawkishness of this meeting, and there are a lot of short bets heading into it. But I'll stick to my guns and say that the Bank of Japan, if they can, will find a way of wriggling out of a hike because they always seem to find a way somewhere along the lines. Now, if we look at the dollar yen daily chart on the left, and it's been very, very choppy overall. Now, we do have the Fed meeting to factor in as well, and there is a potential there could be more hawkish as expected as well. And if that's the case, this could be a case of bulls looking to buy the dips. But of course, we've still got another day and a half until that arrives. And I think as we get into the European session, they'll be seeing this big bearish bar and looking for potential for a break lower of these swing lows and maybe going back down to the 158.60 area. But again, we then need to refine or refocus our attention on the Fed meeting. And that's where I think we could be looking for potential dips whilst price remain above that monthly pivot point. Now, the Aussie yen has been in a tremendous uptrend overall since April last year. We had this lovely breakout from this flag pattern yesterday, and I did an article earlier today saying I think it could continue higher towards 116. Just keeping in mind, we've got the trimmed mean inflation report for Australia tomorrow, and if that comes in hot as I suspect, that could solidify bets of 3 hikes from the RBA this year, and that could help the Aussie yen cross continue higher towards maybe 116 as the weeks roll on. For now, of course, momentum's clearly against it, and I think bears are looking to fade into minor moves, maybe somewhere within this range. A Swissy yen is an interesting one because for whatever reason 204 has been a magic level it can't seem to cross with any conviction. You had several failed attempts to reach it, break above it, and more recently hold above it. Momentum is now lower. What I like about going into this session is we've got a clear break beneath the monthly R1 pivot point and the 20-day average, so near-term momentum clearly against the Swissy yen. Euro yen is also another one to keep an eye on, but I think for bullish setups. Again, it's a lovely strong uptrend. We've had this lovely little pullback. It's quite timely. Overall, I think looking at the strength of the rally into these highs is probably one to look for evidence of a swing low and very bullish continuation high, because again, I just don't think the Bank of Japan really are committing to this hike. They're just saying it for now and will wriggle out of it at the first opportunity. CAD yen, similar situation where it's kind of struggling around these highs here. I prefer Euro yen for potential longs. I think a bigger movement here is perhaps see how it reacts around this cluster of potential support from the January, February highs and the monthly R2. If we hold above it, I think intraday traders might be looking for bullish setups above it or bearish setups beneath it. So a pivotal area around 214, 215. CAD yen is interesting because it's failed to retest this high And if it closed around current levels, what you'd have here is a dark cloud cover or 2-bar bearish reversal. So maybe we could reconsider a much bigger move to the downside if we get that reversal signal on the daily chart. And then, of course, we've got Kiwi yen, which is clearly the laggard behind Aussie yen. And it's really struggled to make any ground above the March high, let alone the February high. It looks like it's pulling back within this range now. Maybe if we get a break beneath these lows, we could reconsider the potential for a much deeper retracement. So in a nutshell, we're seeing near-term strength for the yen based on the surprise hawkish tone of the Bank of Japan's meeting, even though they held interest rates. That could see a follow-through in yen strength, certainly in the European US sessions. But the bigger question is whether that will continue into the weeks and the months. And at the moment, I think traders are probably looking at buying the dips on those daily time frames, but for now, momentum's against them. As always, I hope that's useful. Wish you best of luck with your trading.